Hello everyone, welcome to my YouTube channel. Today, let's learn together what is journal and how it is prepared. Journal. Journal is a book of primary entry or original entry. Any business transaction is first recorded in this book. With the increase in the number of transactions, it is very difficult for a human being to remember all the transactions. To overcome this drawback, journal is prepared. It is a first step in accounting cycle. The entry which is made in journal is called journal entry. In double entry system of accounting, we have to make at least two entries for every transaction. Here is the pro forma of journal. Let us discuss one by one. Date. Here date means on which day a particular transaction takes place. Particulars. Particulars means the two aspects of a transactions, that is debit or credit, are recorded. LF. LF here means ledger folio. It is the page number of ledger on which corresponding entry is posted. Amount. The amount to be debited or credited we are recorded. Now let's get into this sum. First I will say in simple way, then we will record in the proforma. Here is the sum. Journalize the following transactions in the book of Imran. The whole sum will follow three rules of accounting. They are personal account rule, debit the receiver, credit the giver. Real account rule, debit what comes in, credit what goes out. And nominal account rule, debit all expenses and losses, credit all incomes and gains. First, we have started business with cash. Here we have two accounts, cash and capital. Here we have two accounts, cash and capital. Cash is a real account, capital is a personal account. So real account rule is debit what comes in and personal account rule is credit the giver. Next we have paid into bank. So here we have bank and cash. So bank is a personal account, cash is a real account. Here we have debit the receiver and here we have credit what goes out. And next entry we have goods purchased for cash. So we have two accounts, purchases and cash. So purchases is real account, cash is also a real account. Here debit what comes in, here credit what goes out. Next entry we have purchase of furniture and payment by check. So two accounts are furniture and cash. Furniture is a real account and cash is also a real account. Same we have debit what comes in, credit what goes out. Next entry we have sold goods for cash. Cash as well as sales. Cash is real account and sales is also a real account. Same here, debit what comes in, credit what goes out. Next entry we have sold goods to Arvind. So before transaction we have sold goods for cash. That's why we wrote cash. It is a cash transaction. Next entry we have sold goods to Arvind. It is a credit transaction. So here instead of cash we will write Arvind. And as well as sales. So Arvind is a personal account because he is a person, and sales is a real account. So what is the rule of personal account? Uh, Debit the receiver and credit the giver. So here debit the receiver. Here credit what goes out. Next we have goods purchased from Amrit. So previous entry we have goods purchased for cash. Here we have goods purchased from Amrit. So purchased for cash is cash transaction, and purchased from Amrit is a credit transaction. So we have here purchases as well as Amrit. So purchases is a real account, Amrit is a personal account. Here debit what comes in. Here credit the receiver. Sorry, credit the giver. Next entry we have goods returned to Amrit Lal. So before transaction we purchased, and here we are returning the goods. So we have here Amrit, here purchases return. Purchases return. This is the personal account. Here is the real account. Here we will write debit the receiver. Here is credit what goes out. Next entry we have goods written by Aravind. In previous entry we wrote goods returned to Amrit. So here goods written by Arvind. It means sales returns. So here we have sales return. Here we have Arvind. Here we have Arvind. This is the real account. This is the personal account. Debit what comes in, and credit the giver. So next entry we have here cash received from Aravind and discount allowed to him. Here we have cash and discount. Cash is real, which is coming in, and discount is nominal account. Credit all incomes and gains. Credit all incomes and gains. So next we have here withdrawal from bank for personal use as well as in business. So we have here cash and bank. Cash is real account and bank is personal account. Real account has debit what comes in. Here credit the receiver. For business is also same. Next, pay telephone rent for 1 year. We have here cash. First we will get rent and cash. Rent is a nominal account. Cash is real. We are paying the rent, so cash is going out. Nominal debit all expenses or losses. Here we have credit what goes out. Next entry we have cash paid to Amrit in full settlement of his account. So we have here Amrit and cash. He is a personal account. Cash is a real account. Debit the receiver. Debit the receiver. And here credit what goes out. So last entry we have paid for stationery, rent and salaries. So we have here stationery, rent and salaries. As well as cash. These both are nominal accounts. Here we have real account. So nominal account debit all expenses or losses, and here we have debit what goes out. Next we will record the transactions in this general pro forma. First transaction we have started business with cash. So here we will be writing date like this 2002 June 1st. So here entry will be cash account debtor to capital account. Amount is 45,000. So next we have paid into bank. So 2002 date is first only June 1st. So entry will be bank account debtor to cash account. Here amount is 25,000. Here bank is receiving. Okay. So next entry we have goods purchased for cash. So we are purchasing goods for cash. So date is 2002 June 2nd. Entry will be purchases account debtor to cash account. Actually here narration will be here narration is being started business. So for bank account to cash, your narration will be being cash paid into bank, and for third entry, narration will be being goods purchased for cash. Here, let us see like this. Yeah. Or we can say here being cash purchases. So next entry we have purchase of furniture and payment by check. So date is June 3rd. Sorry, 2002 June 3rd. So entries furniture account to bank account debtor to bank account. So amount is 5,000. So here narration will be furniture purchased. So next entry we have sold goods for cash. Date is 5th. So here entry is cash account debtor to sales account. Amount is 8,500. Here narration is cash sales. Here we sold goods for cash. So next we have sold goods to Arvind. So date is 8th June. So here it is a credit sales. So we are not writing credit. We are writing the person name. So entry will be Arvind account debtor to sales account. Amount is 4,000. So next entry we have goods purchased from Amrit. Date is June 10th. So goods purchased from Amrit. It is a credit purchase. So entry will be purchase account data to Amrit account. So amount is 7,000. So here narration is credit sales. Here narration is credit purchases. So next entry we have goods returned to Amrit. So we are returning goods. It means a purchase returns. The previous entry will be reverse. Date is 12th June. So entry will be reverse. Amrit account data to purchases return. So amount is 1,000 rupees goods we returned. So amount will be reverse. Here nil, 1,000, here nil. So narration will be goods returned. So next entry we have goods returned by Arvind. So it is a sales return. Date is June 15th. Yeah, it's June 15th. So here credit sales is there, no? That entry will be reverse. So sales return account data to Arvind account. Amount is 200. Yeah, it's 200. 200. So sales return we will be also called as return inverse. So narration will be being goods return So next entry we have cash received from Arvind and discount allowed to him. So June 18th. The entry will be cash account data discount account data to Aravind account. So amount is cash is 3,760, discount is 40, so total is 4,000. Sorry, 3,800. So narration will be being cash paid and discount received. So next entry we have withdrawal from bank for personal use and withdrawal from bank for use in business. So date is 2002 June 21st. The entry will be drawings account, debtor, cash account, debtor to bank. So amount is drawings is 1000, cash is 5000, so total is 6000. Narration will be being cash withdrawal. So next entry is pay telephone rent for 1 year. So here we are paying rent. So date is 25th June. Entry will be rent, telephone rent account debtor to cash account. Amount is 400. And narration will be in paid rent, paid telephone rent. So I will write this again. Telephone rent account debtor to cash. So be in paid telephone rent. So here I think it is the last entry. We will see. No, it is not last entry. So CAD pays to Amrit Lal in full settlement of his account. So we purchased the goods on credit, so we are paying cash. So 2002 June 28th, and the entry will be Amrit account debtor to cash account to discount account. So here amount is here 6000, here 5940, here 60. So narration is being cash paid. Here we have the last entry. So paid for stationery, rent and salaries to staff. Date is June 30. So first paid for stationery, account debtor. Next rent, account debtor. And last salaries to staff, account debtor. To cash, to cash. So amount is it is for 200 and 1000 is for rent and 2500 is for salaries. Total will be 3700. 3700. And narration will be in paid for stationery, rent and salaries to staff. I hope you got this sum. I hope you understood the topic, how to do the journal entries. This is the first step in the accounting cycle. I hope you got and you understand the this writing, and I will provide the link in the description. You can refer the notes from the description box. I will provide the notes, and thank you for watching the video. Please refer the PDF link in the description box. Thank you for watching the video.